Howdy, Jacob here. Today I'm doing a video update on all of the companies that I've reviewed so far that are within 25% of a buy price, which to me basically just expresses a company that could be a possible 10% return, as I usually put in 15% discount rate. So to be within 25% of that is roughly a 10% return. And so I've gone through my generic stock screener fundamentals and dividend yield. There are a bunch of companies that I'm way behind on doing deep dives, but I was out of town the beginning of June, so lagging out a bit there. I had to make a bunch of videos in ahead of time, but anyways, hopefully this month and next month I can grind through definitely a few companies to do a deeper dive on to really give you guys extra things to see if you guys give some extra detail around what I look at so that you can look at similar things, extra things. Please tell me what you're looking at because I might be missing something. Again, my in-depth videos aren't meant to be end all be all. Even after I do an in-depth video and it looks like an attractive price, I look at their competitors 20F or 10K if it's a local or um, an ADS or something. And I always look at quarterly reports of competitors. I look at the news of the company that I'm looking at, the news of the competitors. Even my in-depth analysis is really probably a third the way there. So don't take anything I say on my initial videos to heart. Don't take anything I say on my in-depth videos to heart. They're just meant to help you guys do the extra. Um, just look at the basics of looking at a company's. There's always way more to do, but I don't do that. The remaining 6%, I don't post those videos because, again, I'm just trying to show a process here, and it's so easy to dwindle companies down in my perspective, and I think a lot of people look at too many or they look too hard into too many companies where they miss out on some, and I absolutely am missing out on some because I'm just initially doing valuations and then looking at 10K, 10Qs, early reports. But anyways, let's get back to it. This is just going to be an update of anything that's within 25% of buy price based on my initial analysis. And then the highlighted portion in the difference column is going to be companies that I've done a review on. And so we have Axel Entertainment. It's within 10%. I definitely need to do a deeper dive on them. AGCO Corporation, AMN Healthcare Services. I want to do a deeper dive on them. Amphastar Pharmaceuticals, American Woodwork Corporation, Automation, Avnet, Alibaba, Bright Cove, Baidu. So I definitely companies that when they get within 10%, I do a deeper dive on them. So I just need to get to it honestly because there's a lot in the other two screeners as well. So fundamentals, these are companies that have a positive forward PE. So they look to be profitable. They have a great return on equity assets and invested and on investment. So these are going to be what I would consider to be good companies just based on fundamentals. Obviously, you're going to have to dig deeper to make sure these are actually good companies because it's also pretty short term. They could have like a one-time huge event where their earnings were or operation income from operations was massive, which is inflating that return on investment, return on asset, and return on equity figure, because that's the numerator. But we're looking at the Buckle, Blackstone, D-Local, Enterprise, Fortinet, Golden Entertainment, InMode, Mastercraft, Marine Products Corp, Obsidian, Oxford, Robert Half, Shoals Tax, Sega, Steel Dynamics, Alta Beauty, Comstock, NVR, Tenaris, Vital Energy. And so Alta, I've done a review on them. I think that they're one of the better retail companies. Um, Sega or Shoals Technology, looking pretty attractive there. Mastercraft Bow, I think that's an interesting one where um, it's a leisure business, and so I think when things get bad for the economy, there's going to be less people buying that. It's almost like when times are best, their PE is lowest, and when times are worst, when they have the lowest earnings that they have, um, that's probably the best time to get into those companies, which is just a little weird. But um, So we do have a couple companies here I want to do a deeper dive on. D Local, to me, um, I think this is an attractive buy price. I think that it's a great company. You're going to get a lot of growth. My biggest hesitation is their declining margins, but um, just do your own analysis, make sure that it makes sense to you, because valuation is one part, and then you have to put in your margin of safety, whether that be in the discount rate or whether that be at the end. But there's some good companies here, a lot that I'm sure a lot of you haven't heard of, but a lot that you also have as well. And then we have our dividend yield. This is going to be looks to be a lot that are within 10%. So I really got to do some more videos here. But we got Ambev, BGSF, so BGS Staffing, Lumen Brands, Berry Corporation, Bassett Furniture, B2 Gold, Cracker Barrel, Energy Co., Dime Brands, um, all the rest of them. Metafast looks like a great deal. Leg and Plate, I think I said it before, they took away their dividend, so that really hit their stock pretty hard. Did I update that? Let's do 88. Let's see if I remove their dividend. Okay, so if I take away that dividend, doesn't look as attractive. Metafast, I mean, again, I do think that there's been massive declines in revenue. They're losing a lot of coaches, which is definitely hindering their growth. But I think that to me personally, I think that's more short term, and I think that them getting into the GLP-1 game, although they invested very little compared to the capabilities of Life Mode, I think that it was a good start. We just have a company with no long term, no short term debt, and a plethora of cash. I think that their revenues and earnings are going to be hit, but I still think they'll have positive earnings, positive free cash flow, and their balance sheet is amazing. So I think it's a safe investment, but I do think it's going to take time. So again, as always, do your analysis, see if that makes sense to you. Some of these other companies, yeah, heard of some of them, haven't heard of others. I mean, I've heard of all because I did the analysis, but some of them that just look, you got Ford Motor, and then you got Cracker Barrel. Anytime you go on a road trip, you see them on the side of the road. So, um, again, we do have a lot of companies that I think are at prices that will give you very reasonable returns. And I think that, here we have dividend yields over 4%. So, like I said, Leggett and Plate reduced their dividend or took it away. So that's not part of the yield anymore. But then you have our profitable or fundamentals, great return on investment. These are companies that are going to hopefully compound on themselves. And then you have your generic stocks, which are just companies that are just going to be profitable. You're going to have to do more research on them. They're not necessarily going to give you a high yield. They're not necessarily the greatest return on investment. But any company, in my perspective, can be a fantastic buy and give you a great return. So I do hope everyone enjoyed this overview. Like I said, I want to do it every month. It's been over a month and a half, or pretty much a month and a half since I did it last time. So I'll try to be better. I've been doing two company reviews a day, but I'll try to do better at doing the deeper dives and making sure I do this about once a month. So hope you enjoy it, and I hope you have a fantastic rest of your day. Thank you.